in just a second. So a meeting of the minds refers to the closing of a contract, consideration, offer and acceptance, or consummation of a contract. Meeting of the minds. And for those not in there, and I know you might be watching or on your phone, you can use the chat to answer the questions as well. All right, so offer and acceptance, pretty good. So we got most of you on that one. All right, let's see who's pulling out ahead. Janine. All right, Janine. And a reminder, I'll write it down. The millionaire real estate agent. There you go. So a reminder, the faster you answer the question, the more points you get. Be careful though, because you might answer wrong when you try to do it too fast. So it's a fine balance. All right, question number 2. An example of this type of leasehold estate is a month-to-month lease. Estate at sufferance, estate for months, estate at will, or periodic estate. All right, good. Good. Okay. Little confusion, periodic estate. So a leasehold estate and a month-to-month is the periodic. So think of a period of time. So when they say, you know, a month-to-month lease, periodic estate. All right. Ooh, some movement in the board. Angel and Don on the move. Which would a buyer prefer? Land installment contract or purchase money mortgage? Now remember, they're asking what a buyer would prefer. So is it a land installment, purchase money mortgage, either as both convey legal title or either as both convey equitable title? Purchase money mortgage. Let's see. All right. Don on the rise. Harvey enters into a lease where he must pay 30% of the landlord's expenses. Which type of lease did Harvey sign? Was it a gross lease, percentage lease, a net lease, or a land lease? That's right, net lease. And that gets people all the time when they say 30%. So remember, in that kind of lease, like you're paying, the lease is where you pay a percentage of the business profit, not the landlord's expenses. So that's the difference between percentage and the net. So just always remember, percentage lease means you're paying a percentage of your business profit. Don's on fire. In a suit brought under the federal fair housing law as amended, punitive damages may be as much as $10,000, $1,000, $50,000, or there is no limit on the punitive damages. That is correct. There is no limit on the punitive damages. All right. Rita with 3 in a row. The taking of another person's rights and obligations in a pre-existing contract is known as assignment, ostensible liability, assumption, or novation. All right, it was assumption. And a lot of people picked assignment on that one. So, assumption involves taking and receiving of another person's rights. Assignment is the giving of a person's rights and interests under a contract. So, if you're going to assign it, think about who can actually, when you think about the words, who can assign something. So you're giving something when you assign it, and assumption is taking it. So if you assume, or you're assuming it, you're taking it, and if you're assigning it, you're giving it. So wording is important in these, because the reason they do it this way is you're going to read a lot of contracts. You're going to read a lot of, back and forth. And if someone writes something in a certain way, you have to be able to interpret it in order to protect your client's rights. So make sure you read through the question carefully to see it's the taking of another person's rights and not the giving. So that's the important part that you'll notice throughout the test, is it's all about the wording. A real property transfer fee of $1 million on the sale of a real estate at a total consideration of $63,500 equals $6.30, $6,350, $635, or 63.5. This is just to make sure you know what a mill means. Right. So it's 1/1000. So you divide it by 1,000 and it's 6350. And that's how you determine mills. All right, down at the top. Effective gross income best describes gross income in an ideal situation with no vacancy and collection losses, gross income minus debt services, gross income minus a figure for vacancy and collection losses, or net income. So effective gross. There you go. Yep. So, and I noticed some of you are reading it, which is cool, and then answering the question. That's not cheating. Refusing to make loans based on the racial composition of a neighborhood is called blockbusting, exclusionary zoning, steering, or redlining. All right. So there was some confusion there. Steering. So steering is when you're the agent and you're moving people towards one neighborhood or another. Anytime it deals with loans or lending, it's going to be redlining. Redlining was started because the loans, they wouldn't insure the loans in certain areas. So they redline those areas of the parts that they would not insure. And so that's why you couldn't get loans in those areas, and they called it redlining. So if it has to do with lending, then it's going to be redlining. If it's about an agent saying, hey, you should go in this neighborhood or that neighborhood, that's steering. Blockbusting is when agents came in and scared people into thinking that people of, color or outside influence were moving into the neighborhood, getting people to sell their homes in order to leave the neighborhood because they thought it was going downhill. So those are the three different ones that you're really going to have to know. Exclusionary zoning pretty much went out a long time ago. They outlawed that fairly early. I think it was, it might have even been in the 1800s they outlawed that. maybe early 1900s. Yeah, it was 1900s, early 1900s. So they weren't allowed to zone to be exclusive. All right. What is not a fiduciary duty of an Ohio real estate licensee? Loan arranging, care, accountability, or obedience? Not a duty. Correct. Everybody got that one. All right. What special concern do foreclosed properties often present? Buying the property at a discount may have tax implications. The property sale may be subject to additional fees to be passed on to the new buyer. The homeowners may or may not have property insurance, or there could be hidden title issues. Right. Title issues. Um, you know, not necessarily fees passed on a new buyer. You can look at like maybe liens or things like that. But again, that's going to be on the title. So anytime there are liens or anything like that, the title company is going to find that. So yeah, think hidden title issues as opposed to different fees because the banks want to sell them, they want to get it off their books. So they're not really going to hit you with a lot of fees for it. All right, read on the move. Fewer buyers in a high price range would create what kind of pressure on housing prices? So fewer buyers, high price range, would it be downward pressure, strong pressure, steady pressure, or upward pressure? Which way would it make the price go, up or down, if you had fewer buyers at a higher price range? That's right, downward pressure. So upward would be there are fewer houses like we're experiencing right now. There's low inventory, so prices are high. Even though we're selling less homes, we're down probably 15 to 20% in units. We're probably still going to have the fourth or fifth best year we've ever had in real estate history in volume, in prices. So, because there are so few homes, prices go up. When it's a supply and demand game. If there's a lot of supply and not enough buyers, then prices go down to entice the buyers to buy. And just the opposite. If there's not enough, supply and a lot of buyers, prices go up because buyers have to get something. Then it becomes competition. Genuine assent means a contract can be binding even under duress, a contract can be binding even under fraud, or a contract can be binding even under undue influence, or consent must be freely given before a contract can be legally binding. Probably should have read that last one first. You guys all jumped on it after I said it. All right. What document serves as escrow instructions? Listing agreement, the good faith estimate, purchase agreement, or the HUD-1 settlement statement? What are your escrow instructions? And where are they? Right. Yep. So it's always the contract. The contract rules out everything else. And just be careful. Even if you have something, in a like accessory document, it's always going to be the contract that the title company is going to look at for their instructions on how to close. So say you forgot to check the box for a home warranty and you have every other document saying that they're getting a home warranty, the title company is only going to look at the contract and say there's no home warranty on here, even if you had all the other documents. So that your purchase agreement is the actual instructions for how everything is handled, from earnest money to home warranties to everything. Your commission, it's all there in the purchase agreement. So that's, you definitely want to make sure you look that over thoroughly. All right. A disabled tenant was denied permission to install a handlebar in the shower. What law has the landlord violated? Fair Housing Act, ADA, no law has been violated, or the Civil Rights Act of 1866. All right. Yep. ADA. So just think Fair Housing Act is like, think of that as actually purchasing the home. So it keeps people from being prevented from buying the home. ADA, the Americans with Disability Act, is everything inside of the home. So, if you're disabled and need a handrail or anything like that, that's ADA, because it's not saying that they weren't allowed to buy the home. It's saying that they weren't allowed to put a handlebar up inside of it. So, ADA could be outside the home too if it was a ramp or something like that. But fair housing is to buy it. ADA is to make it handicap accessible or disability accessible. The fee for renewing a broker's license is $149, $259, $139, or $243. I always found this one interesting because almost all of you are getting a sales license, an agent's license, not a brokerage license. So the fact that they always ask about brokers. Yes, 243. All right. So that's the one you just have to know. And here's the reality of it. You're gonna get asked that for like the state questions. So just be prepared. And actually I want to put something in the chat right now. There are 4 sections that are important on your main part. Practice of real estate, general principles, contracts, and finance. So 55 of the 80 questions in the national portion are going to deal with those 4 subjects. And then in your state portion, brokerage relationships and license laws, 30 of your 40 questions out of the state portion are going to deal with those 2 subjects. So if you hammer those out and get really good at those subjects, you're going to know the majority. You can pass the course just by knowing that and miss all the other miscellaneous stuff, but you'll pass at a 70% just by knowing those. So just know that, those are the ones you really need to make sure you know, because you're going to have the most questions in those 6 topics. Hopefully that was helpful. And back to our regularly scheduled program. A brief summary of a property's history listing all recorded documents that may affect the title is a certificate of title, title insurance, title report, or abstract of title. All right, good. So got a few of you. So yeah, title report is slightly different than an abstract of title. And if you read the media, it's the record. It's a list of all the recorded defects. So that's on your title report. So, the abstract is the evidence of a marketable title. So, title report is just the list of all the recorded defects. The abstract is the evidence of a marketable title. No movement there. A property is valued at $100,000 and is taxed at 45 mils. The assessment rate on the property is 35%. The yearly tax is $1,575, $157.50, $15750, or $15.75. This was a hard one to do quickly on the math. So read the formula. I'm going to keep it up there for you. So, you take the appraised value and multiply it by the assessment rate of 35%, which gives you 35,000. Then you take the assessed value and multiply it by the millage rate of 45. But you got to divide it by 1,000 because a mill means $1 for every 1,000. So what you get is 1575. So that's how you do that math. And actually, I got somebody in the waiting room. There we go. So that's how you do the math. One new message. Let's see. What two sections mostly cover exam? So I missed one earlier. What two sections mostly cover the exam? So, no. The Millionaire Real Estate Agent isn't a book that covers the exam. That's a book because your real estate school teaches you the rules of real estate. They don't teach you actually how to do real estate. So they don't teach you how to actually go out and sell it or actually do it. They just teach you the rules of it. So Millionaire Real Estate Agent teaches you how to do real estate. Go ahead, Jerome. You're muted though. I see your hand.
Yeah, you said you mentioned like two sections, maybe it was three, that mostly covered the exam. So what are the sections again?
So I put it in the chat. It should be there. But here it is. It's practice of real estate is practice of real estate, general principles, contracts, and finance. So those are your four sections in the national part of the exam. And then in the state portion of the exam, it's brokerage relationships and license laws.
Okay,
and regulations. So those two, so of the four in the national, those are going to be like 50 something questions out of 80, and 30 of the 40 questions on the state portion are going to be those two in the state. So that's going to be the majority of your questions on the exam, dealing with those 6 categories. All good?
Okay. Yeah, got you. Thanks.
All right. Okay, moving on. Mortgage rates are recorded in order to assure amortization payments, comply with the truth in lending regulations, transfer title to the mortgagee, or create a valid lien. Why are mortgages recorded? And by the way, Jerome, your hand's still up if you want to put that down.
Okay, yeah, I'm going to bring it down. Sorry.
No worries. All right. Almost everybody, well, no, almost everybody got it wrong. So yeah, you record it to create a valid lien, because if it's not recorded with the courthouse, then there's no lien actually put on the property for the bank or the lender. So complying, it's recording has nothing to do with truth in lending. Like having the rates on the paperwork to show you what rate you're paying and everything like that, that's truth in lending. Recording it, this is after you've signed everything, after it's done. This is to create a lien for the property. So that way the bank has something, is able to, foreclose on it if, you don't pay them. An option agreement is neither a bilateral contract nor a unilateral contract, a bilateral contract, or both a bilateral and a unilateral contract.
Both.
Nope. An option agreement is unilateral because only one person is obligated to actually go through with it, and that is the seller. They're obligated to, because the buyer can, it's basically, if you were to say, hey, I want the first right of refusal to buy this property if you ever sell. So the seller, if you opt in, the seller has to sell it to you, but the buyer never has to opt in. So they could say, never mind, I don't want it. And so it's only unilateral on the seller, not the buyer. Does that make sense?
Okay, yeah. Yeah.
All right. Janine on the move, moving on up. The basic requirements for an offer include neither objective intent nor subjective intent to contract, objective intent, both objective intent and subjective intent, and then subjective intent to contract. Try saying that like 5 times fast. All right, most of you got it wrong. So it's objective intent. And we'll show the media. So the intent requirement is concerned with what the person says or does rather than what a person is actually thinking. So what they're thinking is subjective. So you only want objective intent. So, it's what a reasonable person could interpret as a serious expression of intent. So, not what you're thinking. They can't read your mind. It has to be your objective intent. The purpose of the Ohio Real Estate Canons of Ethics is to bring professional standing to the practice of real estate, eliminate part-time sales agent, make it harder to get a real estate license, or produce revenue for the state of Ohio. All right, everybody knew that one. Which one of the following actions would result in the legal termination of an agency agreement? The client wants the seller to make improvements to the property. There's an unexpected death in the agent's family. The client wants to attach an addendum to the sales contract. The term specified in the agency agreement expired.
The term specified.
There you go. Yep. Correct.
I got that one right.
A listing agreement is an agreement between seller and buyer, salesperson and broker, seller and salesperson, or seller and broker. All right. Only got a couple of you. So anytime when you're talking about agreements, remember the salesperson is acting on behalf of the brokerage. So when you sign an agreement as a salesperson with a seller or a buyer, they are actually signing an agreement with the brokerage, not you. So even though you can sign for the brokerage, the agreement is between the broker and the seller, or the broker and the buyer. You were not actually involved in it. So the agreements are always between the broker and the client, even though it may be your signature on it. The act of the government taking private property for public use with just compensation is condemnation, escheat, eminent domain, or taxation.
Eminent domain.
Yes. Oh, no, condemnation. So yeah, I was thinking something else, but yeah, condemnation. So the act is condemnation. The power to do it is eminent domain. So the fact that they have the ability to do it is eminent domain, but the act itself, so the act of government is condemnation. And escheats when it reverts back to state ownership. So again, it's always important to read what they say. The principal broker has the following duties except comply with fair housing documentation requirements, prepare listing agreements, oversee and direct operations, or comply with office requirements. Oh, a lot of people waiting on this one. But reading it, I bet a lot of people got it wrong. Yeah. So yeah, they don't have to prepare listing agreements. That's not a broker's duty. Everything else on there is their duty. They do have to comply with office requirements. They do have to oversee and direct operations, and they do have to comply with fair housing documentation requirements. So the only thing they don't have to do is prepare listing documents. Because why? Those have to be prepared by an attorney. They have to be done legally. And we are not allowed to do the unlawful practice of law. A seller gave her agent a check for getting her house sold so quickly. What must the salesperson do with the check? Give the check back to the seller, keep the check regardless of the amount. The agent may keep the check if it's less than $10,000, or give the check to his broker.
Get a check to the broker.
You are correct, sir.
Yeah. Yeah.
In real estate, only your broker can pay you from the transaction. So, just remember that. If you do a deal with a brokerage out of state or anything else, it has to run through your broker. If you're being paid from the commission, from the sale of a property, it all has to go through the broker in order to come back to you. So you got to give it to the broker, and then the broker will pay you. A broker lists a home. This agreement can be terminated by all of the following except broker bankruptcy, death of the seller, death of the broker, death of the salesperson. I was going to say, we just talked about this one. Still got a couple. So remember, all of the following except. So you got to remember the except. So when you say death of the broker, that would terminate the agreement because the agreement's with the broker. The salesperson is the only person not on the agreement. Broker bankruptcy would also terminate it, and so would death of the seller. The rate of commission that may be charged on the sale of improved property is a rate agreed upon between the broker and the property owner, 6%, the rate agreed upon between the buyer and the sales associate, or the rate agreed upon between the broker and the sales associate. All right, good job. The offeror is the person who performs as agreed, accepts the offer, makes the offer, or breaches the contract.
Makes the offer.
Yep. And the offeree is the one that accepts the offer. In a real estate transaction in which you represent the seller, your duty to the other parties is to be honest in all matters that do not affect your client's interests, maintain the confidentiality of all matters that others disclose to you, be polite and courteous, treat them honestly and fairly. This might come up a couple of times in your test.
Treat them honestly and fairly.
Yep. That is your duty to all parties.
Yeah.
You know, any party involved, your duty is to treat them honestly and fairly. So, an aside on this is, remember, as a real estate agent, you are a real estate agent 24 hours a day, 7 days a week, 365 days a year. If you do something dishonest in a real estate transaction, you know, that could be something as far as like finding a deal off market that you want to buy for yourself. Because you're a real estate agent, you have to be honest and fair. You can't tell them, you know, hey, I'll buy your house for 60 when you know it's worth 120, without telling them, hey, on the open market, you can probably get 120, but I'll give you 60 right now for it if you sell it to me. As long as you've given them that information, then you're fine. You just can't, you know, be dishonest about what they could get. So that's the key to that. Okay. You are an agent all the time. To be an effective property manager, a licensee must be familiar with a variety of agency disclosures, independent contract agreements, employment contracts, or lease agreements. Property manager.
Lease agreements.
Yes. Yes. So property manager is pretty much only dealing with lease agreements. Employment contracts are between, even if you're commercial, that's between the employer and employees. And independent contractor agreements, not so much. I mean, you may have to deal with independent contractors, but you don't have to worry about their agreements for the most part. You have to be on your lease agreements though. In most states, the listing broker has a fiduciary duty to the salesperson, buyer, customer, or client. All right, good job. Yes, client. Their fiduciary is always to the client. When can a broker reveal confidential information about a client? Under no circumstances, when the listing expires, never, or under subpoena. This is one that may come up in different wording. Yeah, it's under subpoena. So typically, you're right. It would be never unless the court subpoenas you to do it. That is the only time you are allowed to reveal confidential information, is when required by law. So under subpoena, yes, you are allowed. And that is it. So, you know, sometimes the answer is going to be never, depending on how they word it. But yeah, never you're allowed unless you're under subpoena. The salesperson will have a buyer sign an Ohio State agency disclosure form at the closing, prior to qualifying the buyer, prior to writing an offer, or prior to showing the properties.
At closing.
I was waiting for the others. You'd be wrong at closing. It's prior to writing an offer. So you're at closing is definitely not the one, but prior to showing properties, you're thinking of the not an agency disclosure form. I'm blanking on the name of it, but it's it's basically the Miranda rights that basically says, hey, anything you tell me is, open if I'm not signed to you, that kind of thing. But what do they call it? I can't believe I can't remember the name. But yeah, hang on. Consumer guide. Yep, consumer guide. Consumer guide to agency. So agency disclosure and consumer guide are different things. Remember, the agency disclosure just says who you're working for. So, you would put, and you'll be asked this in the test too, which number is like dual agency. So dual agency is number 3, agency from different brokerages is number 2, and then single representation is number 1. So you'll be asked how that page is broken down in your test as well. So be aware of that. So Ohio State Agency Disclosure Form, you'll not only have to know that you have to have it prior to writing an offer, you'll also have to know which number is which. 3, like I said, 3 is dual, 2 is separate brokerages, and 1 is individual representation only on the one side. When must an Ohio buyer's agent disclose his agency relationship to an unrepresented seller? At closing, relationships don't need to be disclosed. At first substantive contact, when asked about the relationship.
At first.
Yes. Oh, and for whoever wrote agencies, relationship don't need to be disclosed, just also note that was talking about an agency relationship. Actual relationships also have to be disclosed. So if I was helping my sister buy a house, I would have to let the other side know that the agent is related to the buyer. Same thing as if my sister was selling a house. I would have to let the other side know. I would actually have to put it in the listing agreement that the agent is related to the seller. So you do have to disclose relationships for sure. The leasehold estate that can be terminated by either party and cannot be assigned is tenancy at will, joint tenancy, periodic tenancy, estate for years. That's funny. Misspelled tenancy twice, 3 times. It's misspelled on every one of those. All right. Okay. Yeah. You guys got it for the most part. Tenancy at will. Yes. Which approach to value is typically used for investment property of 2 to 4 family units? Cost approach, revenue approach, income approach, or sales comparison approach? Now, this is going to your appraisals. So when they talk about the approach for value, think of your appraisals. All right. Yes, the income approach. Which of these is not a way in Ohio agency relationships can be legally terminated? The broker dies, the client files for bankruptcy, the buyer client dies, or the salesperson dies. All right, good job for the ones who said the salesperson dies. Remember, which of these is not a way of Ohio relationships can be legally terminated? So if anybody in the contract dies, then yes. And if anybody in the contract files for bankruptcy, which is the broker or the clients, the buyer or the seller, the only one that is not involved is the salesperson. An in-company transaction is one in which agents from different brokerages represent the parties. Seller and buyer are both licensed real estate agents in the same brokerage. Different agents from the same brokerage represent the buyer and seller, or the buyer uses the same title company as the seller. In-company transaction. Okay. So yeah, it's when different agents from the same company, same brokerage represent the buyer and seller. So it's like dual agency for the brokerage. So in-company transaction, think of it like dual agency for the brokerage. So yeah, seller and buyer are both licensed real estate agents in the same brokerage. I could see how that would make you think that, but no, it's just when they represent the both agents represent someone there. So we're going to stop at 40 because we're at 653 right now. Don, wow, highest answer streak of 5. So, good job, Don. Way to go, Angel and Rita coming in second and third. Way to go, everyone. So I'm going to leave the last few minutes open for any questions, in general about real estate, any questions about the exam that I might be able to answer. So I'm going to leave it open for the next 5 minutes for a question and answer period. So feel free to take yourself off mute or throw it in the chat.
Hey, Eddie, real quick, all your invites and everything that come through for these sessions on Tuesday mention prep. And I think I registered for it a few weeks ago. Is that like only like scheduled for like certain periods, or I don't know? I feel like I registered and then I haven't seen anything about it. So I'm just
curious. If anybody's registering for prep, let me know because that's a separate thing. It's just being rolled out really in Ohio. So I can get you set up with the right person over at KW Prep. So yeah, just let me know and I'll make a note of that.
I can send you an email as well, but yeah, I think I did it like 2 weeks ago, and then I haven't seen anything up.
Yeah, shoot me a message and then I'll get you connected.
Okay, all right, thank you.
Mm-hmm. You registered. So KW Prep is it's a program through Keller Williams that kind of walks you through a little bit of preparing you for the exam and also preparing you for real estate in general. So it gives you the knowledge on how to get started in the business, things to do. So it kind of gets a jump start because, like I said, the classes are all about the rules of real estate, not how to do it. So this one gives you a little bit of both. So it helps you with the exam, but then also helps you with how to really get going in real estate. And so again, so I'll check on that. So anybody that tried registering for KW but never received anything, yeah. So it might. I'll take the blame for that. That we're putting it out there and haven't been monitoring it. So I'll make sure that somebody's looking at that and getting those in. Because again, it's a fairly new program and we haven't really run it as much yet. I did a trial run back in, I don't know, January or something like that. But I didn't know that we were putting it on the thing. So, all right. Yeah, I'll make sure that we get that set up. You're scheduled to take the test next month. Do I need to register with a teacher or instructor? Do you have to have a code for Kahoot? Yeah, if you want to play Kahoot, I'm not allowed to give you the Kahoot login, but at the same time, like if you want to play Kahoot, you can there is a code if you want to play during the study sessions. It's usually on the bottom there or at the top. It gives you a little code, the game pin. And as far as what was the question before that? Scheduled to take test next. Do I need to register with the teacher instructor? So Pauline, have you gotten a sponsor? Or have you put in an application? You scheduled your test, so you've applied and have a sponsor, right? Hello? You still there? If you're talking, you're on mute, and I don't see your response in the chat. Yeah, CompuCram. I use CompuCram when I took my test. It was really helpful for me. I also do CompuCram on these. It's just that we've been doing CompuCram a lot lately, so I went back to Kahoot just because it's been a minute. Angelica's got her hand up. Go ahead.
One of the questions that came up on the exam that I took last week was what is the process if your licenses are suspended? What are the fees associated with having them reinstated? And what is that process?
So you would have to, if your license is suspended. Where's my book? I'm gonna be honest, off the top of my head, I don't remember. I need my book to see that one, and typically it's here, but for some reason it's not here. So I can get back to you on that. But yeah, it's just a matter of looking it up, and because what is it? Because you would have to reapply. You'd have to send a payment into the division, make sure that all your CE is up to date. But I forget what the penalty is for suspension, because there are different ones for inactive, suspended, on hold, all those things. So I'd have to look that up. I'm sorry, I don't know. Sorry, Angelica.
Okay. I also too, I want to do prep too. So like, how can I get involved?
So do you get the emails from me?
Yes.
Okay, it's on the email, and then I'll go in and just check to see who's applied and everything, and then we'll go from there.
Okay. I'll put my email in the chat too.
I saw that. Thank you. All right. Well, it is 7:01.
I have one question. I'm sorry.
Yep.
I came in late. I'm so sorry. I just had a question on the prep course. Is that for like as you're done studying that you go into that, or as you're going through your study?
You can do it as you go through your study. It's just extra. So KW Prep is something that they came up with to help people get started in real estate. So it's like a supplement. I would say, because it's national, be a little careful because some rules are different. Like the rules in North Carolina, where I was originally licensed, are different than the rules in Ohio. So they're going to give you very general information that would apply nationally, not necessarily to the state stuff. So have a good night, Sharita. So yeah, and it's going to give you a lot of good information on how to develop your business, because again, that's what the real estate school isn't going to teach you. So KW Prep is, really good for helping you get your business going and the doing of real estate, as opposed to just the rules of it.
Gotcha. Okay, thank you. this is being recorded, so can I go back and watch it or?
Yep. So, and for anybody else on here, you can go back and watch other ones that we've done too. So feel free to hop in. Typically in the emails, it's going to offer you an opportunity to look, get in the study session and also go back and look at the previous ones.
Okay, great. Thank you.
You're welcome. All right. Well, thank you all for being here. Hope you had that it was informative for you. And I look forward to seeing you again next week, unless you're taking your test. And then I look forward to seeing you at the onboarding.